Wow, the market is down so much, meaning we actually have a lot of opportunity in front of us, and I'm going to reveal the opportunities that I see in the market right now. And if the market recovers 10%, options can likely make 10x that return. That's because options have leverage. You put a little bit of money in, and if it goes in your direction, they make a lot of money back. Since the market is down so much, buying options on specific stocks that I'm going to reveal is more attractive because markets typically experience V-shaped recoveries. So in this video, I'm going to show you two different plays, which options to choose, and then how to close that option position for a large profit. And speaking of picking the right option, I want to mention OptionsFi. OptionsFi is an artificial intelligence option picker. It scans the market and tells you exactly what ticker, strike, and option to trade based on algorithms. It scans options based on back-tested data and recommends a trade sent to you by email, taking away all of the work of research. It's built by a team of ex-traders who want to automate the lengthy time that it takes to do research and technical analysis. The algorithm uses 10 different factors and scores them to pick likely option winners. One factor OptionFi uses is a momentum factor, which predicts performance based on changing market momentum. So if the market is bearish, the algorithm will quickly pick up on that shift. It's averaged 3% a month, showing positive returns in 8 out of the 10 years it was tested. It's a startup that a friend of mine from Goldman Sachs coded, and I believe it can help you save time and generate fast trading ideas. If you want an easy way to get professional-like trades, you can follow by clicking my link in my description. Back to the video. All right, check out Tesla. I have a large position, but I have another idea for a bull call spread. This is where I'm going to be buying a call option and selling another call option. I'm going to first show you the technical analysis. So looking at Tesla's technical chart right here, I'm going to add a few indicators to show you what's really important, the things that I look for, okay? So the stock has gone up tremendously. This is the 1-year chart, and the stock was basically around $710 back in August of 2021. So we're almost a year in and we're seeing the same levels again. Now, what's really important is the stock did peak around $1,229 per share. And then it had a very bearish downward trend, went back up, bearish downward trend, went back up, bearish downward trend. So you tell me, what do you think is gonna happen next? I mean, 1, 2, 3, okay? There's a very simple pattern for me to look at. Also, not just the pattern that I'm looking at visually, there's a couple other things. First of all, you can see right here that there was a double bottom. A double bottom is important because investors are essentially selling off the stock, hits a bottom and then it recovers, then investors sell off the stock and it hits another bottom. But right here, the bottom is interesting because it stopped at 764 and then again at 764. And in fact, if I change the line to candles, you can see right here that there was a huge buying pressure. I mean, this whole green candle shows there's a lot of support at this level. And now again, I can see another green candle because we've only seen red candles coming up. And this is a gap that needs to be filled. This is one gap, by the way, that could potentially be filled down the road, but this is another gap. You can see right here, this is a huge gap right here. So I think that Tesla stock is going to actually trade around the high $800 level. It might take some time. Maybe it'll take a few weeks, maybe a month, but I'm going to show you an option position that's going to take advantage of this potential gap up, even if it does take a month or two, because I'm going to show you a bull call spread that's going to be about 2 months out. So now this is the candle chart. I was looking at the line chart. I also want to look at a few different indicators. One of them that's important is RSI. Now RSI, I always go to the 14-day period. That's fine. And again, the overbought area will be 80 and the oversold area will be 20. I'm going to save that. I'm going to go down and you can see right here that it's currently at 38. This is much closer to the oversold area of 20 than obviously the overbought area of 80. This is a pretty good indicator. It usually is around 50. So you can see that Tesla is usually, around 40, 50. It's even in this overbought territory around 73 many times. And right around here, we know that Tesla was overbought around October 28th. It was at 93 RSI. But anyways, comparing it to the history, and in fact, if I expand this, you can see right here that you can kind of treat RSI as a chart in itself. So currently RSI is sitting very, very low. In fact, it looks like it's the lowest it's really been for about a year. So I expect a really big recovery on Tesla. I think that it is oversold. I mean, there's a lot of good things that Tesla is doing, and I don't think it deserves to go down from $1,145 per share all the way down to $700 in just 1 month. I mean, I've been a Tesla bull for a long time. So let's go back into my Robinhood platform. And actually, I did want to show you one more indicator. Let me go to indicators. Let me go to moving average. Let me go to the 30-day moving average. I just want to see where it's trending for the past 30 days. $917. Okay, so this moving average also shows you the past 30 days where the stock has traded on average. So it kind of smooths out that whole volatility of the stock. So right now it's sitting at 917. Again, I don't know if we're going to go to 917 so quick, but at least I do think we can fill half of this gap based on the candles. I think we're going to fill half this gap and be somewhere around this middle mark of $850 per share. And I think that's going to happen maybe in a couple months. So let's make sure that we capture a couple months using options. Okay, so first option trade, and I'm still up 70K here on this stock. I have 620 shares. It's about 32% of my portfolio. I am a Tesla bull. So let's go to trade Tesla options. Again, I'm going to show you a bull call spread. This is a bullish strategy, hence the name is a bull call spread. We're going to be buying a call option. Now, again, I said we're going to go 2 months out. So very simple, very easy. Today is about the 20th. I mean, a couple days until May 20th. So May, June, July. So I'm going to go to July 15. July 15 is the third Friday of the month. Usually options expire the third Friday of every month. So July 15 is good. In fact, I can even go to August 19, but let's actually analyze July 15 first. And to be a little bit safer, we will also check out August 19, but first of all, July 15th, okay? Step number 1, we wanna buy a call option. So that's step number 1. We wanna buy a call option that is near the money. That way we can participate with the stock going up. And again, I said we're gonna be around the $850 level. That is my assumption. So I wanna pick an option position that is going to reflect my assumption. Let's go ahead and pick a slightly out of the money option at 770. If I expand this, the bid is $74, the ask is $76. High implied volatility, good healthy volume. This looks good. So I'm gonna go ahead and buy this call option, buy the 770. Now I wanna open up a sell call option because buying a call option is pretty expensive. I mean, it is going to cost $7,570 as you can see here, and it has to go up a decent amount for me to break even. But let's say you don't wanna pay $7,500. Let's say you're dealing with a smaller portfolio. Let's see how low we can actually get the cost. So I'm going to go sell a call option now. And I'm going to look at, let's see. So I could click the 780, but I already see right here, this would only be a double on your money. I want to have a higher return. I want to make a higher risk return here. This is a double on your money in a couple months, which is really good. Obviously, really amazing. But, I'm going to show you how to make even more money. But anyways, right here, 495 can turn into about $1,000. So you'll have $505 worth of profit. Pretty good 2x, but if I don't sell the 780 and I go a little bit higher, again, I think the stock can go up to 850. So let's go and pick the 800. Now, if I pick the 800, this is a higher return because now we can turn $14 into 30, but it's still not that much higher. So I'm gonna get rid of 800. I'm gonna scroll up. I'm gonna make a wider strike difference. So right now it's 770. The higher I go, the wider the strike difference gets. And 820 is pretty good because that's going to be a $5,000 potential that you can make. Currently, you're gonna put in about $22. You get about $5,000 out, or $2,253, I should say. So this is almost a 2.5x. Now this is a little bit better of a return. However, let's actually exit out of here and let's see if we can go all the way to 850, what happens? As you'll notice, the wider that I go, the more potential you have to make money. So right here, the ratio is going to be even higher, and I'm going to cap it out at 870 because that's going to be a complete $10,000 gain. You can turn about $3,995 into a total of $10,000. That is actually exactly 2.5x. So this is something that I would look at, but I want to go a little bit safer. I want to have a good return, so I don't want to go out to 870. Now, I do want to actually go out to August. I want to see how the returns change. Actually do an analysis if it's better to go out for August or is it better to go out for July? All right, so let's go for August and let's go for, okay, so you can see right here that the strikes are a little bit different. I can't pick the 770 anymore. It's a little bit less liquid. It's farther into the future. However, that's fine. I can pick the 800 and let's see if we have an 850. And we do have an 850 and oops, that should be a buy. Again, you want to buy that first call option. You want to buy it. The closer to the money, 800 is closer to 750 than 850 is to 750. So I'm buying the closer to the money leg, the 800, because again, this is a bullish strategy. You're buying the closer to the money and then you're selling farther out of the money. It's worth a lot less, but this right here, $6,510 is what you will collect. You have to spend this amount of money, but then you're collecting this amount of money, and it's really reducing the amount of premium that you have to pay up front. So rather than paying $8,500, you only need to pay less than $2,000. Now, this position right here can turn $2,000 into $3,000 worth of profit, or really $2,000 into $5,000. So now if we look at the break-even point, we break even at $819.88, and we realize our maximum profit at $850. So beyond $850, you're not making any more money. However, that's fine because from here, this break-even point of $819 to $850, you're collecting a lot of money and you're not putting that much money up front. You're only putting less than $2,000, way cheaper than buying 100 shares of Tesla, which is $75,000. Hello, I don't think everyone has that amount of money just sitting around, or even if they do, they don't necessarily want to dump that into one stock. They want to diversify. So this is a much cheaper way. You only have to put up $2,000, and then in return, you can make a total of $5,000 or $3,000 with the profit. Not too bad considering this is a 3-month play for a 2.5, or actually a little bit more than a 2.5x return. All right, the second trade that I do want to show you is going to be on Facebook. Now, Facebook also is in a very downward trend. I do not think that the stock belongs here. Sure, they have some issues with Apple. However, I'm very, very bullish on Facebook. I think the Facebook story is going to continue. They are investing in the metaverse. That will take some time to play out. But let's go to indicators. Let's click RSI. Let's see where the RSI is. It's at 50, so I'm a little bit less bullish on Facebook than I am on Tesla. However, Facebook has lower implied volatility, so it's actually cheaper to do buying strategies. So I'm going to show you what that means in just a second. But right here, Facebook is essentially right in the middle, so it's not a buy or a sell based on the RSI. However, looking at the chart itself, this was a $375 stock. I'm not saying that it deserves to be around here. It's sold off, and I do think that it deserves to be around here, maybe $224 per share. So I do think we have about 10% upside, which is what I said in the beginning of the video. So about 10% upside for Facebook. I also think that could be true for Netflix as well, but let's focus on Facebook for now. And if I do go into statistics, I want to quickly show you that price to sales is really low. I mean, this stock is pretty cheap. I mean, it's less than 5. Tesla is like 12 or even a little bit higher than that. And Facebook, despite not having the best earnings, does still have quarterly year over year. So let's go over and trade Facebook bull call spread. I'm going to type in FB right here. And I do think that Facebook is about a $220 stock. So let's go and pick a bull call spread. Looks like I'm already playing a few different positions here. I'm up $1,479. I made this trade in the Discord group, so we've been eating pretty good over there. If you do want to check that out, it's a free call with an option enrollment specialist by clicking the link in my description. So let's go to trade Facebook options. And again, I'm going to go for buying a call option first. I'm going to go out, about 2 or 3 months. We can actually go out for July 15. I know some of you impatient people want faster money, so we can go for a little bit of a faster play, but 2 or 3 months, both of them are fine. For Tesla, I probably prefer 3 months, let the story play out a little bit more. But for Facebook, although I don't think it could go up as much as Tesla can, I think it can recover much faster because the stock is a really big value stock at the moment, whereas Tesla is still a growth story, but Facebook is becoming a very big value play. So first of all, buy call option, okay? I'm gonna buy a near the money call option. So I could buy the 205, but I'll buy the 210 because again, I think 220 is reasonable. So I'll buy the 210 because 210, 220, this is a $1,000 gain. Now, what we're going to do is we're gonna buy this call option right here for $10.53 or $1,053. I can already tell this is going to be a much cheaper strategy than it is to do a bull call spread on Tesla. So I'm going to buy the 210 call option for $10.53. I'm going to go sell. And now I could go for the 215. This is not a problem. However, I do want you to know it's a little bit better to buy the 210 and then sell the 220 than buy two 210 215s, because every time you're trading, although you might not have any cost, if I expand this option right here, there's a little bit of a difference with the bid and ask spread. So here it's 835 and 855. And every time you're trading, you're going to get the middle point. So basically you're losing about $10 because there's a little bit of a difference between the bid and the ask spread. So instead, I'd rather go for the 220. There's also a difference, but it's better to do one bull call spread than two. The less, the better, because you don't have as much bid ask spread cost. So I'm going to go for 220. I'm going to sell the 220. And right here, I can see the total cost is $383. And my maximum gain will be the difference of 220 to 10, which is $1,000. So here you can turn $383 into $1,000 in 2 months. And the risk reward here is very favorable. I mean, you're risking $383. You have a potential gain of $617. Your break even would be $213 for Facebook, which is very, very close to the money. I mean, I can absolutely see the stock going up to this price within the next couple months. Then you realize your max profit around $220 per share exactly. From there, you won't make any money, but right here, you have a really good profit potential. So these are my two current bullish plays on Facebook and Tesla. Again, if you want to check out OptionFi software, which will have a done for you process, basically they just email you all the plays for you to just buy and then sell, and it tells you everything that's attractive based on their 10-factor model. You can check out the description link, and also you can check out the description for my Discord community. Thanks for watching. I'll see you in the next one.